Can you turn your first 100 euros into a solid investment in Germany? Well, I've spent the last 6 years researching for the best investing opportunities in Germany, from the easiest to the most difficult ones. So today I'm going to show you how you can invest your first 100 euro in Germany. Is it really possible to grow 100 euro into something significant through investing? And if you stay at the very end, I'm also going to walk you through the investing process and share my screen to show you my favorite way of investing in Germany. By the way, if you're new here, my name is Essen, and on this channel we discuss how to build wealth in Germany. I'm sure you've heard about how important it is to put your money to work, but I also know how difficult it is when you're just getting started. I remember 6 years ago when I was about to send my first 100 euros from my Deutsche Bank account into my investment account. I was really scared. I checked my IBAN number multiple times just to make sure it was correct. So I've been through what you are feeling right now. That's why it's important to start with the basics, as I'll be sharing my experiences with you throughout this video. So investing is basically putting your money into something, whether that's stocks, real estate, crypto, or gold, among many other things. The whole point of investing is basically to keep your money safe from inflation, because on average the euro loses about 2% of purchasing power every single year due to inflation. I'm sure you've seen this in your own life as well. A trip to Aldi or Lidl is more expensive than ever before. So the effect of inflation is real, and you can see what inflation does to your money. That's why you have to invest it so that your money keeps up with inflation and of course grow as well. Investing is risky. Here you might ask, Hassan, isn't investing really risky? The answer is yes, it is risky, but not investing is more riskier, because investing allows you to break from a mindset where you are trading your time for money instead of making your money work for you. For example, if you invested 100 euro every single month into the S&P 500 over 30 years at an average 7% annual return adjusted for inflation, you would have 113,000 euros instead of just 24,000 euros if you just kept the money in a current account. And that's what investing can do for you. But looking at the performance charts, you will ask yourself, is now the right time to start investing? The whole market is at a peak. Is AI a bubble? Will the stock market crash in the next couple of months? First of all, let me tell you that all of these fears are correct to have. The stock market can crash tomorrow. The AI bubble can definitely burst. That's why you have to consider 3 things before you invest your first 100 euro in Germany. First is that you want to invest and not trade, because trading means picking stocks or commodities like gold or silver or even cryptocurrencies and actively buying and selling them to get a profit. Trading is an active process, while investing is a long-term process. That's why the second thing to consider is your investment time horizon. This means how long you want to stay in the market. Is it 5 years, 10 years, or until you retire in 30 to 40 years? Now, this does not mean that if you set a time horizon of 20 years, you cannot sell an investment before those 20 years. It only means that if the market situation is difficult, you will not be forced to sell in that difficult market situation. And with that, we have our third point, which is your risk tolerance. Considering this point lets you decide what kind of investment you would like to make, as most beginners have a low risk tolerance, which means that any fluctuation in the value of your investment can make you sell it. That's why it's important to start with lower risk assets when you start investing. Once you learn the process, you can definitely look into riskier assets, as I'll explain in a little bit. So how do you actually invest your first 100 euro? The first place to start is by opening a securities account or a depot konto. My favorite is Scalable Capital. You can sign up with Scalable Capital for free using this QR code or the first link in the description. Once your investment account is set up, simply transferring money from your checking account to this securities account doesn't work. It just means that you have an investment account with money in it. At this point, it's basically like a low interest savings account until you actually buy stocks and ETFs with that money. I remember as soon as the money arrived in my investing account, I opened the app to invest in the stock market. It was extremely overwhelming. The app showed so many options: bonds, bonds, regions, investing strategies, industries and trends, among so many other things. I was very confused, as I'm sure you might be as well. However, when you're deciding where to invest your first 100 euros in Germany, it comes down to basically two options. You can either invest in stocks or you can invest in ETFs. Don't worry, I'm going to explain both one by one. But before I continue, please hit the like button if you're getting value from this video, hit the hype button if you see it, and consider subscribing. So stocks are basically small pieces of ownership in a company. A great example would be if you buy a Microsoft stock, that means you become a very tiny percentage owner in Microsoft. Now there are different ways to buy stocks. One way is that you can actually just buy the individual stock directly. So you would just go and buy Microsoft stock. Another way to invest in stocks is you can buy them as a part of an index fund or an exchange traded fund. Think of a fund as a bundle of many different stocks, and the benefit of a fund is that it gives you instant ownership into hundreds or even thousands of different companies all in one single purchase. The benefit of buying a fund or an ETF is that it gives you what's called diversification. This is quite important, as investing a tiny bit in a lot of companies can make your financial future independent of whether a single company does well. Because if that company doesn't perform well, then you risk your whole investment. On the one hand, if you own a small amount of a large number of companies, you can be quite safe comparatively, as the economy goes up and down, but it's impossible for all of your companies to go down completely and for you to lose all of your money. Alright, now you know if you want to invest your first 100 euros in Germany in the stock market. Funds or ETFs are a safer way to invest. So let's talk how to choose a fund. There are a lot of different funds out there. Just have a look at the funds available on Scalable Capital. When you are choosing one to invest in, you want to look for one that has low fees, because each ETF charges what's called a management fee. It's a small fee taken in addition to your investment, for giving you some convenience of owning all of these stocks in one easy purchase. This management fee is also called as an expense ratio. This expense ratio could be between 0.0 something percent up to 1% and even higher. Anything below 0.5% is okay, but I would recommend staying away from ETFs that have an expense ratio higher than 1%. Generally, funds or ETFs that follow a specific index have a low expense ratio. These funds are also known as index funds. One of the most popular examples would be the S&P 500 ETF. This tracks the performance of the top 500 companies in the United States. There are other examples of index funds like DAX, NASDAQ, FTSE or MSCI World. Now going back to our example of investing 100 euro each month, if our ETF has a 1% expense ratio, we would end up with just 95,000 euros instead of 112,000 euros, with an ETF having 0.05% expense ratio. That's why it's extremely crucial to select an ETF or a fund with a low expense ratio. Okay, now let me share my screen with you and show you exactly how to invest your first 100 euro in Germany. As I mentioned earlier, to invest in the stock market, you would need an investment account. My favorite investing app in Germany is Scalable Capital. You can sign up with this investing app for totally free, and if you want to support this channel, you can use my link in the description to sign up at no additional cost to you. This way you can support this channel and help me keep making videos like this one. Okay, once we have our funds in our account, we can head over to the search option. Here we are going to search for the S&P 500 Information Technology ETF. This is my favorite ETF. Now I'm going to tap the buy button. Select the amount to be 100 and confirm, and that's it. I have just invested 100 euros in the stock market. Obviously, as a beginner, you might be interested to know about my investment portfolio and how it is performing. In this video, I share my Scalable Capital investment portfolio.